Life for a small or medium-sized company in Britain right now isn't easy. The economy is flatlining and credit is still constrained. Net lending to business by Britain's 5 main banks fell by £9.6 billion last year. And banks fell short of the government's Project Merlin small business lending targets by more than £1 billion. To make matters worse for the government, its much vaunted credit easing scheme, which is designed to boost demand for credit and result in cheaper loans for SMEs, is now being questioned by several of the UK's biggest banks. The government hopes the credit easing scheme will allow banks to piggyback on its credit rating. So the government borrows at 1% and then charges banks a similar fee to reduce the cost of loans to SMEs. The banks say the idea sounds great in principle, but they're not prepared to pay to take part in the scheme. And that's where the problem lies.
HSBC, Barclays and Santander UK could all have some difficulty in making the scheme work for them. So that would only leave the 2 state-backed banks, Royal Bank of Scotland and Lloyds Banking Group, as the beneficiaries of the scheme potentially. The biggest obstacle, I think, in making it work is for HSBC, and that's because they have this huge, cheap sort of funding source of their retail deposit, whereas other banks tap the wholesale markets. HSBC rely almost purely on customer deposit. So the government's have set aside £20 billion over the next 2 years, so £10 billion a year, which doesn't look huge given that the 5 UK banks lent £75 billion last year alone.
The government should show its pro-business attitude by putting some money in. It's too nice just to preach. There should be some criteria, and if these criteria are met, these government subsidies could be used. But certainly preaching to banks to say, well, give money away, and then if one of these companies go bankrupt, say, oh, why did you lend money to the fragile place? They have to decide what they want to do, because a lot of banks and a lot of bankers are really thinking that, maybe London is not a friendly place where to be.
And it's not just the banks that are questioning the scheme. Many small businesses are far from convinced too. Serial entrepreneur James Layfield's latest venture is Central, a work hub where entrepreneurs, many of whom are seeking early-stage funding, pay a membership fee to hold meetings and run their businesses. He thinks the government should take a different approach.
My views on the latest credit easing scheme are that it's not going to make a scrap of difference to the people that really need it. At the end of the day, it's only being looked at by the banks that have been supported by the government anyway. Fundamentally, it still uses the same system to get access to funding, which is the banking system, that I truly believe is flawed in giving this market, these entrepreneurs, these startups, these future growth companies access to the money they really need. What you want to try and do is free up access to funding from angel investors, and that they should be the people that the government are trying to incentivise through tax initiatives to really unlock their purses and get the money flowing back into the startup community.
So many young entrepreneurs meeting here at Central are finding it difficult to get access to funding, but a lack of confidence to invest is another issue. Many small businesses don't want to borrow at any rate until the economy shows signs of picking up.
It will take a long time to rebuild that confidence, and until that point, the vast majority of businesses will probably not be looking to finance growth. But what is absolutely essential is for those viable businesses that are looking to grow, they do find that easy route to finance as and when they need it. Too many businesses last year who were looking to grow simply weren't able to find that source of funding. And just at the point when we hope we're starting to see an upturn, we do need to have, for businesses to be connected to the appropriate funding mechanisms.
None of the banks have walked away from negotiations with the Treasury yet, and neither the banks nor the Treasury were prepared to comment on the matter. But there are hopes that a structure for the scheme will be agreed before the budget in March. Yet this is one of the government's flagship ideas, and it would be a big blow if only RBS and Lloyds were involved. Daniel Garaham, Financial Times, London.